All right. Good morning, everybody. It's going to be kind of a boring week with little shots of excitement. FOMC week. Um, there's a lot of history on the FOMC week and the expectation of a sideways market, and that's my base case estimate for this week. 100-point range, maybe a little bit more. Uh, Spot gamma 5400 call wall and 5300, not the put wall, but a solid support. That would give us room to overshoot 5380 and expand into 5400. There could possibly be an overshoot of 54 into the cog line of 5411, but I'm liking the 100-point range. I've shown more than once that on an FOMC week, we'll talk about how it's supposed to be sideways and the market breaks out and just runs like crazy before FOMC. So we can't, you know, pile too heavy in the idea that it's going to be sideways. But on those different FOMCs, there's a QRA that often lands at the same time as an FOMC. And on those weeks, I think if you go back and look in the past and study the different FOMC weeks, if you didn't also have it marked as a QRA, then you wouldn't quite grasp that on Monday of the week of FOMC, you first get the there's two parts to QRA. You get the Monday part of it, which could be the galvanizing force that makes us expand. And then on Wednesday of the FOMC day, we also get the second part of the QRA. So the numbers, it's all statistics and probabilities, but I think we're going to run sideways this week. And we want to pound that message on the table as much as possible. Spread the word. I constantly see people ask questions like, "What was that big move today? Oh my goodness, what happened?" That was CPI. How did you not know it was going to be CPI? Right? Especially if you're day trading. I get it if you're a swing trader and maybe you dabble part time as a trader, things like that'll slip under your radar. If you're day trading, no way you shouldn't have known it was a CPI, PPI, non farm payrolls, FOMC. So this week, spread the word. Tell everybody you know. It's a sideways week. That's what we're expecting. Sideways. Nothing. Hold the range. Sell the highs. Buy the lows. No matter how bullish it looks, no matter how bearish it looks, take the other side until proven otherwise. And I'll show you the levels where it shows us that we didn't want to do that. The NASDAQ, the S&P, the Dow, all flat. Small caps down more than 0.5% and leaning closer to 3/4. China down 1%. Most of the world is on pause, getting a little bit of movement, but for the major economic events on the day, Market Watch doesn't show anything. Somebody reached out one day and said, "I don't know why you'd like Market Watch because it's not showing anything." Well, yeah, but their goal isn't to show you everything. They only want to show you the big things. And if they don't think that there's a big thing for the day, they're just not going to show you anything. Some people like that. This is like the stripped down version, getting rid of all of the noise and bringing to your attention the major thing. And if there is no major thing, then there's nothing. There's other places we can go if we want to be, loaded up with a list of things that we have today. FX Street will give you things from around the world. Does a really good job of pointing out the auctions too. So I like that. We do have auctions today, by the way, and we're going to get European central bank speakers throughout the day today. FOMC week generally puts us in a blackout mode for US speakers, but we're still going to hear from central bankers, as you can see here with European Central Bank, Lane and Elderson. And then, of course, Finance Juice is another place you can go to get this information. So spread the word. Let people know it's FOMC week. That way, by Wednesday, we don't see someone at 2:15 say, "Oh my gosh, what was that really big move?" Really? We can see there's no heavy earnings today. If there was a name that was going to report earnings even this week, probably it would show up here on the right side. It's not to say that there's no earnings today, just that no name in the earnings list is deemed big enough to impact the market. And yeah, if you're not day trading at your computer every day, then these events are going to slip by you. I'm not poking at those people. We're looking at the dollar here. We got that 104 half back acting as support, but we're still in this range between 107 and 100. We've been in this range, for a while. Here's all the way back to 2023 into 2024, and then where we are now. Getting a little bit of a TRB set up. Still got the zone, the range. This is the 10-year, right up into the halfback, 4.5%. Thinkorswim is still struggling with TNX. Every time I try to load TNX, it just sits and spins. I'm sure there's a funny one-liner there somewhere, but it's too early on a Monday. But we need to resolve this halfback level. So while at first blush, this is a resistance, if we can manage to get through the other side and close above it, then we're just going to keep working our way up until we get into that 4.6 again. This is our range for the week. Best guess estimate, right? 5,300 to 5,400. That's the red box. And an overshoot into 5411 cog line, overshoot to the downside into 5292 cog line. It's also our range for the day, interestingly enough. I mean, sure, I had to stretch it a little bit. So, about a 1% move probably with the extensions on it. But that's from Monday, Tuesday, and Wednesday up until 2 o'clock. That's what we're expecting to do. So can we break Friday's high and go higher? Absolutely, yes. Liquidity resides on the other side of the pivot. So we would expect to get to the top, break through the top, go even higher, get into some liquidity, and fail to go higher than that. And then, of course, could we break through Friday's low? Yes, liquidity is on the other side of the pivot. Same thing applies. We could break that low, get into liquidity, fail to go lower. There's different places where you can get those statistics. I usually start with just something that I can do on my own, something that I can quantify. If you Google when was FOMC for 2021, you could go in and just use a drawing tool and mark every event in 2021 and 2022 all the way up until today. You could do the same for CPI, PPI. When you have these events marked out on the chart, it makes it a little bit easier to try to identify what happened after those events. Not just from that one day, like when we got QRA, but after that, what happened to the market. We're on a daily chart here. You can see we're above the 10-day, the 20-day, the 50-day. We're above everything except that 3-day. On the weekly, we're above everything, including the 3-week. Central pivots. The central pivot that we have this morning is lower than the one we had on Friday, completely outside the range. It's really not more narrow than we had. And remember, the more narrow it is, the more likely we could break out and expand. The wider the channel, the more likely it is that we go sideways and we don't expand. So Thursday is a good example of what a really wide channel looks like. And so these look skinny or narrow in comparison to that. But just keep in mind, the channel could be so narrow that you don't even see any yellow there at all. You just see a purple line. It wouldn't even look like a channel. That's how narrow it could be. And we're not that narrow. We don't have an MDP or a missed daily pivot because we've already hit the pivot. We've crossed through it. We were tightly wound in the overnight. Then we had a little expansion. And it really just looks like we're trying to get back up into the zone that we came from. We are above the weekly pivot. It's a good start. Last week, we talked about getting too far away from that weekly pivot. Here's the weekly pivot down here at 52.80. We got a reasonable distance away from it, just kind of stalled out there. We really couldn't get any farther away. When we tried it, it just kept getting rejected. I've tried to quantify how far is too far. Haven't been able to do it yet, but it is something that I focus on when we begin expanding away from the weekly pivot point, just kind of keeping in mind where that weekly pivot is and how far away from it we are. Once you start getting too far away, you got to ask, what's it going to take to drive us even farther away now, which is kind of what we were asking Thursday and Friday across those highs. Sure, we could probably get farther away at that point, but what's it going to take? Some kind of econ that we never got. It's what it would have taken, and we didn't get it. We have S1 at 53.26, which would be just outside of yesterday's range. But really, there's no edge one way or the other. We're sideways. We're basically flat, and we're no closer to either side, whether we're talking about the S levels, the R levels, or even the ADR. We're basically where we started last night. So we don't have any edge. We are underneath the volatility trigger, 0 gamma 53.27-ish, right around that level, right underneath the 10-day. The put wall is a lot closer now, 53.11, hog line, right above that 5,300 area of interest. And volumes look good for as much as we're talking about a sideways market into FOMC. They're not sitting out. Seeing a lot of participation here. It would be worth maybe taking a look at the open interest uh, as we start the week on the futures. Right, the position sizes. Maybe check out the commitment of traders report. All right, so we got enough volume on Friday to move the point of control up. Remember, we talked about last week, it was very unlikely that we would see the point of control move away from this level because we weren't going to lose that volume until we lost these candles somewhere in the week. That it would take a lot of volume on Friday to move that point of control up. Well, we got it. So we've now moved that point of control. And we can tell that, we didn't spend too much time there, or TPO would have been brought up there as well. So we are looking for a shift here on the TPO. That way we have those matching points of control. We don't have a classic shape yet. Still looking more like a D than anything else. We do have an air pocket, but we've already fallen through that. And if we continue to crisscross through this zone, it should fill that in nicely. Breaking 5320 does just bring us down into 5300 and this high volume node there. I'm not going to mark this one myself, but I'll make the argument on why you might want to. So we carry forward the point of control as long as it hasn't been touched. So for an example, this one from back here, we marked this one because once we opened in Globex that night, price didn't come back and hit it. And it's continued to stay on the chart because after that day closed, price has not come back into this area, hasn't been hit. So we keep it on the chart. We didn't do one for this day after it closed because price came right up and hit it and crossed through it multiple times. Same here, but so here's the argument. There's no wrong way to do this. Each analyst has to decide for themselves how they're going to handle these little quirks. We opened right there and immediately fell away from it. So an argument can be made, if you want to, that you're going to carry it forward anyways. It's not a right or wrong. It's just as an analyst, you want to pick a style or pick an approach and then do that, exactly that every time. Don't change your mind. So for me, I don't want it. As a VPOC, I don't want it. As an area of interest or maybe a level of concern, it would be worth marking it out. I'm not going to mark it because it's also really close to the Globex high as a zone. I mean, it's off by what, a point? I'm just going to go ahead and use the Globex high and call it good. But the fact that it's so close to the value area high or the Globex high does give credence to the argument that if we run up today and were to test our own Globex high, that it's likely going to have a hard time breaking through that level. It was the point of control from Friday, and it's our Globex high. So that's two different pivots if you want to look at it that way. We measure all of Friday, we can see that halfback 53.57. It's an area that we've struggled with multiple times in the Globex last night. It's also worth just marking out the RTH. We marked the entire Friday the first time. Here we're just marking just the regular trading hours. So if we do get that Globex breakout, watch out at 53.63 where we could hit our head again. That's another halfback level to focus on. Looks like we had our double bottom test, our bear trap this morning too. We could do this same thing on Friday's low. So here was the Friday's regular trading hours low getting tested. But, we get another shot, we could do the same setup on the low of Friday. Flip it over, it would be the same signal we'd want to see across the high for a breakout here. Just like the RTH on Friday, when we broke above this Globex high and had that tweezer top. It's like a tweezer bottom. Same pattern, same setup, just different sides. All right, we measured the range Friday and talked about how the boxes were pretty much in line, maybe a little less volatility was being priced in, but the box hadn't closed yet. As I mentioned Friday, we would do it again on Monday. We want to measure the current week's range and compare it to last week's range. These ranges are built on volatility. The volatility for whatever market you're using it on. For the ES, we're getting this out of the options levels, right? So the implied volatility gives us our plus and our minus. At the close Friday, we lay out those levels, and you can see that this week's range is smaller than last week's range, less volatility. Now, if you're thinking, wait, dude, that don't make sense. It's an FOMC week. Yep. FOMC is a volatility suppressor. And when I first heard that, I thought, what are you, an idiot? You don't know FOMC makes big moves? Volatility suppressor. You out of your mind? But it's true. It just depends on when you're thinking about it. When I heard that statement, I was thinking Wednesday at 2 o'clock where we get a big move. That's a big move. Volatility is literally the word nerd for movement. So at 2 o'clock on Wednesday, when we make a big move, that's not low volatility, bro. That's a big move. But what about Monday and Tuesday when we're going sideways? Exactly. The market contracts and consolidates and pauses before FOMC. A couple of days, usually Monday and Tuesday and part of Wednesday. Then we get the event, we make a move. It's a volatility suppression. So it makes perfect sense that this week is narrower in range than last week than FOMC. If you don't have the indicator that will draw those lines for you, maybe you're not on Thinkorswim, just come in here and look at Friday's expiration, take that plus and minus and mark it out. Now, you needed to have done this on Friday after the close. Once Sunday night came along and the market opened back up into Globex, this number has moved. It's been moving all night. So it's not the same number as it was when those lines were made. But you can go ahead and get the levels that you do have, or you can just mark out these and then be prepared for it next week, right? This Friday after 4, go in and mark your lines. So for this week, it's 52.99 and 54.08. Notice I rounded there a little bit because the ES does not trade at 52.98.97. You can't trade 97, right? Trade in ticks. Those ticks are 25 each. Just round. We're still on the decline back towards the 10-day. We're less than 0.5% away from it. looking to see if we're going to stabilize or if we're going to come all the way back. But there's been times where we decline towards it and we turn around without hitting it. But more often than not, once we start this fade back, we generally get back to the 10 first. So let's just go ahead and get that out of the way. Anticipate that we're going to tag that 10-day, then we'll reevaluate at that point. We're still more than 1.5% away from the 10-week. We're still expecting to get more than 2% away and get into our happy spot at around 2.5%, 3%. So we want to see this start to turn around and move farther away from the 10. I think if we get below that 1%, we're likely going to just go back and retest the 10-week. But what we're looking to do is hold the line away from that 10, continue to expand away from it. Kind of like back here where we got close. We didn't tag it, got away from it again. So we'll see. We tend to run it in clusters when it comes to the 10-week. We had a really good cluster. It lasted for a long time from October's QRA. So a little dip down, broke the cluster. Now we're looking to make a new one. Now, it's worth saying that even though it's an FOMC week and we're not expecting much out of the indexes like the Qs, SPY, ES, NASDAQ, we're not expecting much out of those. That doesn't mean we can't see a lot of movement from everything else. Apple's got events this week, by the way, and Spot Gamma laid out some interesting levels on Apple. It's worth the read if you didn't read the founder's note this morning. All right, our benchmark or the line in the sand is things have to be up at least a 0.5% in the pre-market for us to consider them up or down. Has to have moved a 0.5%. And gold miners, GDX, is up 0.92%, so that fits. But uranium's not even up a 0.5%. We wouldn't want to lead with uranium anyways. So really nothing is up and nothing is down from this list. But Thinkorswim struggles with pre-market stuff. It's just the way it is. It always has. And there's different workarounds that we can do when it comes to Thinkorswim and check and double check and recheck. But just come over to TrendSpider. They do a really good with pre-market data. TradingView does okay too, to a point. They just struggle with unique lists. So coming over here and looking at what's up this morning, you see Nat Gas, really nice expansion. Again, we don't want a rally led by Nat Gas, but see that we've got commodities like silver, crude, gold, gold miners, Nat Gas, all up this morning. Got some large cap China, but I didn't see KWeb up enough. That would be our China Internet, Baba, Baidu, those China ADRs. So FXI is a good start, but so far it's not given us very much. And hot stocks. Now, this thing's, beat down, nasty looking chart. We're talking about a day trade, right? We're not talking about long-term swings on hot stocks, just taking it for a little bit of a ride. bonds are down a bit, but really we're just continuing that sideways, choppy, nasty mess that we've been working on since April's low. We are getting that higher high and higher low, but I mean, this is a long, drawn out affair. It's going to be a while. Keep your eye on bonds when this 10-year comes into that 4.47 halfback level here. It's right underneath the ADR, and we've gotten close to it. The idea will be if we hit this and really reject, and it's a significant level, we start to fade back off of that level, then we could see a decent reversal in bonds. It's a linear regression line on the bond index. Like the VIX for bonds. Uh, the problem with this is that really it's like a 1 day tick. It'll tick up or tick down. We don't get a constant chart, which is why I had to go out to like a daily to actually see the candles. But bond volatility is picking up off the low end of this channel. Could start to see, some more movement in the bond market. And if we're going to see things pause this week, at least the indexes, and we're looking for other things to move, keep your eye on Bitcoin. This is a really tight range, like an IX10. Markets that are compressed really tight like this tend to expand out of that range really tight. Look at the size of these candles on a day-to-day basis. And look at the size of the candles we've had over the last 2 days and into today, the third day. 70,000, nice round number. It's very likely the half back here on this very large candle. Yeah, close enough. Get through the half back for an expansion back into 72. Break below 69 to test this 68.5 and come back and retest these lows down here, this 66, 65 area. I'd look at the whole thing as a zone. They're going to defend this low. So we'll expect a lot of liquidity down here. That's a really tight range, all things considered, for how much this thing moves. Got to get out of the box for a bigger play. Now, once we get to the edges, then we can look at, those new Bitcoin ETFs and maybe the proxies like Riot, Mara, Coin, Hut, Hive, all of those. But I wouldn't try to play the expansion out of this mini range for those proxies. I would wait to play the proxies until we get to this to the edges. It very likely could be a boring week for Monday, Tuesday, and half of Wednesday. We'll see. Do have a little bit of econ, so keep your eye on Europe. Yeah, they're like the only thing really popping. Yeah, see.